Good morning, afternoon, evening. Please say hi in the chat box. And if you're new, tell us where you're from. Or even if you're old, tell us where you're from. And if you're new, your current level of experience, how long you've been with us, how's things going. And if you've got any questions, put them in the chat box as well. And we'll either answer them as we go along, or we can do a Q&A at the end. Morning, Alvin. And Chris with us this morning. David, Daz, Ashtosh. And Clive, hi Clive, another David, Dewald in South Africa, Etienne, South Africa as well, Fernando, don't recognise this, well I do recognise the surname, but not, I don't know if you're new, Fernando. Norbert from Switzerland, on the edge to full-time pro, good, okay, Norbert. An unusual name for a Swiss person, it may not be your natural place. Suzanne's in London, and Chris says hi, Alvin says hi. And who else we got in here? Let me find Phil. Good morning, Phil. I need to get you onto panel. Get Phil onto the panel. Need to find Ashley as well. Morning, Ronald. Hi, Ronald. See that you joined us. I had a good chat with Robert the other week before I had me up. Niraj, welcome back to you. Eugene as well. Niraj and Phil. Where's Ashley gone? Ronald, Rudolph. Hi, Rudolph. Another South African. We got lots of South Africans with this morning. Udo in Germany. Ashley. Right, Ashley. I can't find... Oh, here we go. Just bear with me, folks, while I make Ashley a panelist as well. Okay, hopefully that'll work. Yep, there we go. Right, we've got Phil with us this morning. He's going to go through some M2 with us. Ashley's going to go through Earth and Sky. And say if you've got any questions. Morning, David from USA. And Daz is from Tanzania. Ah, right, you're the Portuguese gentleman on a boat off Tanzania who was trying to pay by PayPal via something else, I seem to recall. I'm in Portugal at the minute, Daz. That's your home place, home base. Alvin says, hope you're recovering well. I'm getting there, Alvin. I'm getting there. I've still got staples on my stomach together at the moment, so it's not pleasant laid down or sat down, so spending a lot of time on my feet. Righty-ho, so can you all see my screen? You should be able to see Forex Factory page.
Yes.
Yes, thanks, Ash. Righty-ho, so last week we saw that there was unexpected rate rise in Australia and also in Canada, and as a result of which it shook the markets as to be expected, because the unexpected that's the effect it will have. Having said that, sometimes they will put the rate up and then in the following statement they will come out negative. But in this case, the RBA, Reserve Bank of Australia, came out and said they raise rates and they will raise them again if they need to get inflation under control. I think Australian inflation now is about 7%, which is probably the highest it's been in the last 30 years. And Australia didn't really suffer anywhere near like as bad as the US and Europe did after the 2008 crash. So they are coming into uncharted waters in many ways. They also have a major problem in that the housing market. There's so many people in Australia who basically the banks lent them far too much money. I remember talking to a taxi driver in Sydney a few years ago, and he was telling me that his son had just taken a mortgage. And bear in mind, in Sydney now, I think a one-bed apartment starts at $1 million Aussie dollars. And he'd just taken a mortgage as his son at 12 times earnings. So in the UK, traditionally, 5 times earnings on the main wage earner and 2.5 times the partner was always the average. In the UK, when the amount that the banks were willing to lend got up to 7%, 99% of the time it preceded a crash. And that is the concern in Australia. In fact, I was talking to a guy the other day, his Australian mortgage has gone up from $1,800 a month to $4,200. So the amount of people in Australia, every time they raise the rate by 0.25%, it shoves another 10 or 100,000, I'm not sure of the figure, people into arrears with their mortgage and potentially could default and potentially be kicked out. So Niraj says, crazy pricing. Our kids cannot afford to buy houses. It's happening all around the world, Niraj. As I mentioned before, a friend of mine, retired taxi driver from London, he bought his house in, I think it was Lewisham, 30, 40 years ago for 30 grand. It's now 1.4 million. So it's not just Sydney, it's everywhere. And I think the other thing that we need to start thinking about, I was talking to somebody the other day about this. I mean, I've made a lot of money on houses over the years, and it was an American gentleman I was talking to, and he said, in many ways, we've lived through the golden age. We had cheap money. We were able to buy property. And yes, property on average in the UK used to double every 8 years. And that's been going on since the end of the Second World War. But it does make you think that when you've got property prices now at the levels that they are, for example, my taxi driver mate, there's no way his kids can afford to live anywhere near the area that they grew up. And another statistic I always remember is that most people live within, I think it's 10 miles of where they were born. So where they grew up, most people, the majority of people live within a very small radius. Well, all of that's going to change. And for people to be able to buy their own property now, unless they're going to get handouts from their parents and grandparents, are screwed. And you can see a scenario coming where it started in America, where some of the big funds started buying property. And you can quite easily see the situation arising when the big companies will own, you will own nothing and you will rent. And therefore, for the younger people, younger generation, I just can't see things doubling and doubling and doubling anymore. And I think the stock market, there's lots of things going on with the stock market that make absolutely no sense to me. And it just makes you wonder whether there is a reset coming and a change, because the days of just, cost averaging in and putting money away every month in the stock market and you get to retire at 60 and life's wonderful. There's so many people coming up to retirement now who the situation is not wonderful, particularly the self-employed. But the other side of the coin as well is that the return on investment is so poor. Even if you've got $1 million now for a pension to retire, if you were buying an annuity, i.e. you convert it into an amount that they pay you every month, they're only paying about 4% at the moment. So $1 million gives you 40,000 a year, which you may be okay with 40,000 a year. And most people don't have $1 million in their pension fund. So lots of potential hassle coming along. But anyway, that was the significance of this is, as we've said, year after year after year, decade after decade, and even more recently within the last couple of months, don't trade the news because you're guessing. And in this occasion, had you been betting that it was going to stay the same, it could well be that the Aussie dollar whipped through. And there is a chance at the moment the Aussie might be going to go on a run higher. So that is another thing that we need to pay attention to. And the CAD certainly dropped. The US dollar dropped against the CAD and is at the make your mind up kind of level at the moment. So we could be starting to see some changes, particularly in these two pairs. Now, James, one of my private students who's really into data, I mean, he works in data and he approaches his trading from a fundamental position first rather than technical. And he's written an extremely good article this weekend. So if you struggle to understand the implications of what it means when they put the rates up and what's going on, have a read of this article. James explains it in a way that the man in the street can understand it. And what he was explaining here about the Australian government, it's this thing I just mentioned. It's not just that they raised rates, it's the fact that they also said they'll do it again if they need to do. And in which case, if the Australian rate keeps going up and the US has now possibly frozen, we will find out later this week, then the difference between the two is not going to be that great. And therefore, the incentive for Australian funds and big money holders to then put money into America, and as in the dollar, is less attractive. So this could be major implications. So he's explaining what he understands was going on here. Then he explains about the Bank of Canada situation. And then further down here, he was explaining the significance of some of the data, because you see all this data every week. And I was showing you this before. If you're never sure about the data, what it means, all you need to do is click on it, the little folder at the side, and you can see the comments by the actual RBA here, for example. And you can also see comments from some of the better publications. There's some rubbish publications here as well, but Mark the Market is a very good publication. And what else we got in here? CNBC, I'm never sure with CNBC. Anyway, this explains what it's all about. And these are some of the comments after the event. Now, one of the comments after the event on the the German news was, as James was pointing out in his article, last week, one of the guys from the EU talked about the significance of Germany in the EU. And within a few hours, suddenly it came out that their factory orders were way worse than expected. And Germany is the industrial powerhouse of the EU, of the Eurozone. And what's been going on in the Eurozone of late, I think the focus has been on the US. And then we had the nonsense about the debt cycle, which I told you a month ago. Oh, will they agree? Will they agree? Of course they will. Now we've got all that through. Woohoo, that's good for the dollar. The dollar goes up. Well, it's actually, they've just given themselves permission to print another few $1 trillion to kick the can down the road. But hey ho, that was the significance of all of that. But Germany is the powerhouse of Europe, and particularly its industrial production. And therefore, if anything is a clue as to how bad things are in the Eurozone, this is a major red flag. Now, it only comes out as yellow flag news, but this is highly significant. US manufacturing is down as well, but for the powerhouse of Europe to be down, the focus, I believe, is going to come back onto Europe this week, particularly. At the moment, everybody's been forgetting about it, and there's a preoccupation with the war in Ukraine and what's going on in America. They're constantly talking UK down in terms of Brexit's ruined it, and yet Germany is officially in recession and the UK is not. That is not to say the UK is in a good position. What's going on at the minute, they're all in a complete and utter mess. It's just which is least worse. And the final bit then is the focus. Where is everybody focusing? And I think that the spin the bottle is going to point to Europe now. And I don't see any reason for the euro to be going up at the moment. However, I could be wrong. So you all, as always, when it comes to trading, you have to make a plan of both eventualities. If it goes up, what am I going to do? If it goes down, what am I going to do? And at the moment, particularly with a lot of pairs, if they're going sideways, how to play those as well. And we will cover all of that in today's session. So here, this was explained about Germany. Germany was actually almost in recession. It was a fraction of recession prior to COVID. So this is not just Ukraine. This is not just current events. This has been going on for the last few years. Now, on Sunday, I posted talking about less is more. These markets are messy. They are choppy. We are not getting the follow through on a lot of things. Some pairs like the yen have gone. And yes, I think we made 400 or 500 pips out of the yens in May, but now they're up and away with the fairies and need to get in again, but can't get in at the moment because of the rules. So what I was saying here is don't be in a rush to take loads and loads of trades. And this came about because I was talking to a former student of mine last week. He's been doing really well on a funded account. And then he had a couple of bad weeks in which he made a major mess of his account. He's not gone into negative, but he's destroyed a few good months of really good results. And I explained to him, I used to do this. When my early days, I would, in the first few months, 6-9 months, I would have a winning week and then I would give it all away the following week. And then when I kind of got into the second year of doing this, and bear in mind, I was doing this full time. I had retired and semi-retired, emigrated to live in the Canary Islands 20 odd years ago. It was a full-time job for me. I was losing consistently in the first year. The second year, I started to do a lot better, but every now and then I would go into meltdown and give a chunk of it back. And as I was getting better in the second year, all that was happening, the periods between meltdown got longer. And so I could go 3 months, 4 months before I had a meltdown. And then I could go 6 months, hey, I've cracked this, and do it all over again. So what I was explaining to this guy is, look, well, self-analyze. So I basically threw the ball back in his court and said, right, I've had a look at your stats. I've seen what you've done. What have you done wrong? And this is a really important thing for all of you. You need to be self-aware and you need to be able to look at yourself, you almost step outside of yourself and look from the outside and say, what the heck did I do last week? Because ultimately, you do know, we all know, I overtraded, I overleveraged, I over-risked, I moved a stop, I traded through news, whatever. The thing about trading is this is a zero-sum game. I started my first business when I was 20. I employed, by the time I sold the main one when I got to 40, I was employing 25 people, 25 subcontractors, been through all the hassle of running businesses like that. And I understand all of that, which is why so many people come into trading. But the point is with trading, this is a zero-sum game. There is no room for error. There is no room for excuses. Oh, well, this happened, or my wife was ill, or the dog died, or one of the kids was. I don't care. The market doesn't care. All it cares about is that you follow and stick to the rules. So the point I was making to this guy, and I would make to all of you in current markets, be careful, be cautious, don't take too many trades, and stick to the rules. You have to stick to the rules. And the rule I recommend to everybody is maximum risk is 0.5 per trade. And if you have 3 losing trades in a week, you stop. And you can ask in the forum for some advice. You can ask me for advice, but self-analyze yourself first. Did you screw up? Were you doing things wrong? Were you breaking the rules? And if you were, then stop for the week. If you can self-analyze, or you can get a second opinion and it was just you were bad luck and you didn't break the rules, then you may take one more trade. But after that, you halve the risk, because what most people do is that once they start to go on a losing spree, then they start to increase the risk to try to win it back, and they start to take too many trades. So just be very mindful of, we teach you how to do this. We teach you about creating a business plan. We teach you about having trading rules. And we say constantly, you have to stick to the rules. And it doesn't matter whether you have been doing this for 3 months, 6 months, 9 months, 12 months. There is always the danger you will go into meltdown unless you follow the rules. So if you've not done it as yet, go into the forum and you'll see a section on creating rules, which is in here. Just let me have a sip of my tea. So in here, urgent submit your trading plans and rules. This was a live session I did 4 or 5 years ago. And in there, it explains what you need to include in the rules. And you can also watch the recording, the first 20 minutes of this video. And then you've got 10 pages from lots of different members over the last 5 years who have submitted their trade plans. Now, don't blindly copy them. I want you to sit and think about what you're doing and study it. Ideally, make yourself accountable to somebody, but pin notes up around your computer. On a morning before you start the day's session, or before you start to place any trades, create a checklist. Have we got multiple reasons for the entries, for the stops, for the targets, etc., etc., aka everything that we tell you in the plan. So, when I was talking to this guy the other day, I Googled through on our site planning, because I talked about all the things about trade plans, etc. And interestingly, one of them that popped up was the 17th of March, which 17th of March, I was living in the Canary Islands, and I said we were virtually under martial law with what was going on there. But part of this article, I was talking about what the hell is going to happen with COVID, whether people are going to have any money from the government. If not, there's going to be social unrest, etc. And one of the big things that came out of the COVID situation is so many people now, having had a break from work, realize they don't want to go back to it. It's a major problem in the West. In the UK, there's 3 million people out of work that don't show on the unemployment register, who are not in a rush to go back because they're getting money from the government to sit at home on the bums. And the implications of all of that, we have so many younger people now. My average client for private work used to be 50 plus, male, own business or middle management. Kids have left home, gone through college. Now they start focusing on retirement, something to do, not having enough money. We had so many young ones this last few years, and like Ashley that's with us today, who's going to be showing us some Earth and Sky. He's in his late 20s, as is Phil from Michigan in the USA. They kind of went through COVID as well and realized, I don't want to be on the wheel. I don't want to be working for a big corporate that are treating me like dirt, and I don't have the freedom, and I want to be able to travel and I want to be able to do things and stuff. So anything that you want to find, going back through our articles, just type into the search box. And what I was searching for was basically to show this guy how to plan his day. This is an article from Ashley last year. This is July of 2022. Ashley had just quit his job. He was working for a big American company who were treating him like dirt, had him doing 2 people's work through COVID and didn't pay him any more money. And I just said to him, listen, if it's going to screw you that much now, you either come back to me when you're 50 with your 2-3 kids and your grey hair and you wish that you'd done something about it, or do something about it now. And Ashley went through here and he was explaining when he started working self-employed, he got lazy. He was getting up later, so he had a bollocking from me, and we went through what he needed to do. And so here is a good article where he's explaining some of the steps that he took to be focused and organized. If you're not self-employed, this doesn't apply to you, but if you want to become self-employed, you want to be a full-time trader and do other things as well as, then this is a good thing to focus on, because he has been there, done that, and got the t-shirt, as have I. And he mentioned in here a couple of tools that he was using to basically organize your day better. And one of the easiest ones, a guy I was talking to the other day, is use your Google Calendar. I mean, if you are sitting doing trading, or you don't want to be sat at the computer all day anyway, but all you need to do in Google is, and I said to him, right, 6 till 7 a.m., you do some exercise. 7 till 8, you look at your charts, you review your trade ideas. So if anything's happened with the news overnight, anything that could have changed everything. In my case, I used to sit and watch the London Open. And by the way, if you need to set this for every day, all you need to do is you go in here, it's set to busy, and you go to repeat, and that's custom. So it could be weekly, Monday to Friday, you could set. I don't want to bugger up my calendar, so this is from last week. So I'm just going to set it here for 1 day, and it to stop after 5 days. But there, when I went from trading 15 minutes to 4-hour charts, it gave me my life back. And this is what I was doing. I would get up, exercise, try to meditate. I'm rubbish at meditating, but try to meditate. Then I would sit and have a drink and read the news, get ready, make a plan before London opened what I was going to do. And then I would take a break for a few hours and then come back half an hour before the next 4-hour candle close to see what I was going to do next. And then again at 3 o'clock in the afternoon. So that's a free thing that you've all got access to. This is Rescue Time that Ashley used. And Todoist is another one. So again, these are all about getting yourself organized. This one, I have used this. I still have this and really foolishly don't use it at the moment. But I used this years ago. This is more of a life plan. But if you want to plan your whole, where are you trying to be? What do you want to achieve within the next 2 to 3 years? This will give you and it's an app, but it will set up everything for you. It will send you reminders every week. I used this in my early days. I set it to, because I wanted to earn I think it was an extra £1,000 a month to start with. And then later on, I upped it to 2,000 and 3,000. And what it would do is it would send me reminders, and it would say, like, if I got to the 15th of the month and I hadn't earned anything yet, it would be saying to me, right, you need to crack on now because your target is 5,000 a month. So I found that to be really useful and really helpful as well in terms of setting life goals and thinking about what you're trying to achieve. And it is supposedly proven that those who do make the effort and write things down, as in business plan, trading plan, life plan, all of this stuff, are 10 times more likely to succeed than those who wing it. And most folks wing it because most folks, when it comes to trading, as in life, it's, well, particularly with trading, it's a hobby. They have a go, they lose some money. Most people at that point quit. The others amongst us dust ourselves down and have another go and throw some more money at and have another go. But if you set your stall out properly in the first place, you can avoid a lot of pain. And these are all things that would help you on your journey. Now, this week, the other thing that James was talking about in his article were the implications of the news for the week ahead. And it is the biggie. And this is FOMC. And FOMC, this is the one I say to folks, look, by lunchtime on a Wednesday, just don't open any new trades. And certainly don't be opening anything around here. And don't open it when the statement comes out and the rate, because half an hour later, Powell stands up to be grilled by the press. And in a recent event, they said something in the statement that the analysts misinterpreted. The dollar, I can't remember if it's set off up or down, but the dollar shot off. And Powell, realizing that they screwed up, or somebody's just made a shed load of money because they knew, but I wouldn't cast aspersions on anyone. But Powell came out in the press conference and said, hang on a minute, that's not what we meant. And it promptly went completely the other way. So wait, if you're going to take anything at FOMC, wait until the press conference is out and everything has calmed down. Personally, I would wait for the daily candle to close. And personally, I usually wait for London to open because the London market's shut at this point. A large percentage of traders around the world are missing from the markets. and they will have had all night to digest what's going on. So I often will wait for London. GDP growth, New Zealand is important for New Zealand. Now, this is for Thursday. Thursday is another big day. You got the employment change. The RBA in Australia have told us they are focusing also on employment. So although the numbers are tiny compared to the USA, it's still significant. So this could rock the AUD. Then the biggie, Eurozone. So everybody's forecasting at the minute they're going to put up by 4%. Well, the Brits recently went up another 0.25 more than expected. So it's quite possible that the Eurozone possibly could raise it more. Equally, they might surprise and not raise it this time. But then what they might do is say in the statement that they're thinking, you get the picture. The bottom line is, if you are trading through this lot, you are gambling, not trading. You are guessing, and you are playing on a playing field where the big funds get to see this information, even if it's only fractionally before you. And the banks are looking at stuff. They can be in and out of something for half a pip, but they're in with big money. And you, on the other hand, is almost like a slow motion moving to put your finger on the button by the time the banks are in and out. It is a time of the month where it's almost rigged, and therefore walk away is best advice. Final Friday. I don't trade Fridays anyway. Bank of Japan. They surprised recently where the new guy came out, the new finance guy, and said, hey, well, I'm not going to change anything. And bear in mind, the Japanese are 300% of their debt now is equivalent to 3 years of GDP. So their debt is 3 times worse than America. And the guy said, no, we'll just keep going, see how it goes, which is not what the markets were expecting. So any questions up to that point? I will have a look at some charts.
Mark, there was a question from a member that I had. Do you want to answer it?
Yeah, or you answer it. What's the question?
Well, it was basically like around the member is struggling with trades at the moment, and it's mostly around finding good entries. I mean, they put forward orders in the market, but they tend to miss them quite a lot. And the ones that they fire, they don't go very well. So basically, they're trying to find a place on how to get good entries and good stop losses, basically.
Okay. So just as it so happens, I'm going to show that anyway. So we're going to answer that one as we go through. Rudolph, so it says, so it's best not to trade at all this week. Well, not necessarily, Rudolph, but the point would be that today, once the claimant came out, then the pound is tradable today. The Aussie is tradable today. I mean, CPI could rock things as well. But you kind of have to pick your battles with things. So tomorrow, pound GDP, PPI later in the day. So there's no real Aussie, Kiwi, CAD news for the next. Obviously, the dollar thing could affect it. So you just basically just take, if you're going to take stuff, take one at a time, maximum 2. Don't take, if you take 2, don't have both of them pro or anti-dollar, because if one loses, they'll both lose. So one way you can hedge yourself to a degree is to take something long dollar, short dollar with a cross pair. So it's not the case that you can't trade at all. You just have to pick your battles. I mean, the AUD usually for us in Europe comes out, their interest rate news, etc., comes out on a Tuesday at 3 a.m. So often with the Aussie that week, I won't trade it because I won't trade it till after the news comes out. And the reason is I've only got 24 hours from the market opening till the news for Australia. So I haven't got a big enough window really to make the profit. So I will wait until after the news comes out. So it's not don't trade, it's just be careful. And the other thing is, I'll show you some setups in a minute, where one of the things that I do is if we have big news coming out, and the current price is many hundreds of pips away from the major area I am thinking of trading, I will still take some of those trades. But again, only one. And I can show you that now. So in answer to the question from the member that was asking Ashley, it's true. I mean, at the moment, this is not easy. And unfortunately, we've been saying that it's a lot this year. It's not easy. And yet in May, I made the target that I shared with you in 5 trades or less. So it is still doable. But when you're working from the longer time frames, this is going back to Sunday's article, less is more. I don't do a right lot. I don't take many trades. I am quite happy to sit and wait for price to come to me. I will not chase price. So when I look at the dollar index in a minute, we're stuck in here again. So what we wanted was a break and close here and off it goes, or a break below here it goes. At the minute, we're in here. And of course, as a result of which, that is reflected in choppiness on many pairs. Now, this is the euro pound. 2 weeks ago, 3 weeks ago, I said to folks, leave this alone, because it was in, unless you're scalping, but it was in a range of about 30 pips. Because if you can see here, this has now come down a little, but here, this is where the 55 EMA was, it just kept bouncing between the two, and the gap was about 30 pips. So the good news is it's very easy, because you look at stuff like this and say, I'm not touching it. It's pointless touching it because there is no potential reward justifies the risk. What I said to folks is, whilst it was in here, I wanted it to break out or down, and I preferred it to break down because there's nothing technically down here to stop it going fairly quickly back to 83.50. If it'd gone the other way, the problem is it was going into the 200, which is major previous support and resistance. And then you got the 55, then you got a trend line. So there were too many things on the way here. It was quite probable if it set off, it'd bounce off that, then it'd bounce off that, then it would bounce off that. So for me, this was the perfect setup. Once we get the breakout, now what I said to folks, we want the pullback. Now I had this set last week at 86.34. It touched it and missed my entry by the spread, and the blooming thing then dropped 90 pips. This, though, for me, this is a break of a significant area. The 55 EMAs crossing the 200 EMA. We're below all EMAs. We're in a downtrend that's been going on since January. So the start of this year, we've been in a downtrend. We made the break. Everything now, to me, is saying this is a good setup for M2. It is not to say that it will work, because Forex is supposedly completely random, but probability is in my favor. And again, I spoke earlier about checklists. You need a checklist. So to say, how many reasons do I have for taking this trade? Well, I have a sip of my tea. How many reasons are there going on where I have the order, and particularly where the stop is? Somebody tell me on a checklist, I can see 5, 6 reasons to take this trade. Morning, Andrew. This is morning, all new members. First webinar. Nice to see you. Yeah, and Niraj says as well, be patient with the euro pound as well, because the average range is only 40 pips. So it's another thing to come on. Come on, does nobody put their hand up yet? What reasons do I have to short that euro pound in that area? Thank you, Des. Right, one of them, there's the 55 EMA, and this one is a monthly, so very significant. Udo, thank you. 50% fib here and 61 fib here. And then you've got the other 2 EMAs here as well. Yes, Phil, well done. Niraj says it's broken away from the EMAs. I've just told you it's in a downtrend. So you've got 55 EMA monthly. You've got the weekly and the daily 200 EMA. You've got a 55 crossing the 200, which is very bearish. You have a break of a significant area of previous support and resistance. You've got 61.8 to hide your stop behind. And the final thing to think about is, okay, I am risking 30 for a potential 90, 1-to-3 risk reward ratio. So that was the entry the week before, missed it. But for me, this is still the thing. Now, Rudolph asked me, so you don't trade anything? No, it's not that you don't trade anything. If this euro pound is down here when the euro news comes out, I won't put a forward order in, but I will watch here for a potential short if it starts down here, because that would be 100 pips away when the average, as Niraj has pointed out, is 40. So if it's going to stop anywhere, that would be the area it would probably stop. However, if it starts anywhere higher than there. So if it started here, that's only 40 pips away. So if it's extraordinary news or extraordinary comments, there is a chance it could go higher before then dropping. What you have to think about with stuff like this, guys, is that it needs news and data are the catalysts that move these things. And I likened it the other week. I said, look, this is like somebody's thrown petrol on the fire, but nobody's struck a match yet. Now somebody's struck a match, woof, off we go. To get back through here, like we had on this occasion here, you need some major news for a change of sentiment or change of direction. But this has been lower highs, lower lows going on since January. We are in a downtrend. Eurozone economy is officially, well, Germany is officially in recession. The Eurozone's not much further behind. There's multiple reasons. And again, when I went back through the multiple reasons here, talked about EMAs, fibs, places for the stops of the entries, 55 EMA crossing 200, bearish. But also we're talking about fundamentally, Germany's in recession and has just come out this last week that their industrial production is down and worse than expected. So on top of them being in a recession, which officially started at the beginning of the year, they're now producing less stuff. The stuff that they produce is generally quality cars and engineering machinery, etc., that is exported. One of their main exports areas is China. China is currently not, well, China officially is not exactly booming, but it's slowing down. Okay, so multiple reasons to suspect that it will continue to drop. And therefore, I would take that setup now. But with the ECB news on Thursday, I say you would wait. And if we get an overreaction, it moves back up here. It may well be over the weekend that the experts start to reanalyze it and then it sets off back down again. Or if the news comes out particularly bad for the Eurozone, it could be that it tanks further down and then we would have to start looking further. So it's not that there aren't possibilities and it's not that things are not tradable. It's just there are fewer possibilities. And the temptation in that environment is folks then start forcing trades that don't fit their rules. So that's what you have to avoid. Now, gold, I am waiting for gold. I'm hoping gold is going to drop back down to 1900s, first port of call. I am seriously thinking of putting all my spare dollars into gold and silver. Silver, I'm waiting for a drop, ideally to 22. Bitcoin, I said the other day, the SEC now are definitely trying to kill crypto off in the USA, but they can't kill Bitcoin because there's nobody to go after. And I think if another bank goes, and I was reading the other day, there's 300 of the 4,000 plus smaller banks in the US. There's 300 of them that are potentially going to get hammered because of the fall in real estate values in both personal properties and commercial. So if another bank goes or a big bank goes in America or as a run starts, I think Bitcoin's going to go up. So I haven't sold what I've got. If we get a big drop on Bitcoin, I would buy more. Ethereum, I said recently, I did buy Ethereum last year at 1,000 and I explained that in advance to you. And I even had an order at 850 that just missed. So again, if Ethereum does a big drop, I would buy that. Now, USD Swissy. This is the issue at the minute, that the 55 is horizontal and price is just meandering along. So what you generally have, we are looking generally to trade with the trend and we are looking for pullback, breakouts and pullbacks. But as we see here, as with the dollar index, this is going nowhere. And because this is so flat, I don't even like the idea of trading this as a range. But we will have a look at a few more in a moment that are more like to do with the range trade. And I showed you before, this was not tradable as a range for me because the range was too small. What ideally you want is you want this kind of pattern, but with a much bigger range between the two. And then you're looking for somewhere for the top and bottom, and you're looking for bounces off and bounces back down. So that was an example not to trade as a thing. Now the euro is drifting back up. The euro so far today has touched the 55 EMA to the pip, which is why I use these EMAs. And you will see on numerous occasions, more times than not, it will do it. And it's done 59 pips today of an average 67. So there is no way on earth I would be looking to buy the euro at the moment because it's already done its day's range. I don't think that the Eurozone should be going up against anything anyway. And it's hit the 55 EMA. So that for me is a no trade. If I go down to a 4 hour and start thinking about a range, again, well, from here, you could be watching 107.40. You watch them for candlesticks to come down, consolidate. You could fib this on a 4 hour from here to here. So you could talk yourself into taking that one, but the potential is only 50, 60 pips because it's probably going to struggle here. But that is one way of trading a range. Now, it's not the biggest range because it's not been going on long enough. The pound, I'm really out of favor with the pound at the minute. I'm really out of whack with it. But the pound, again, the 200 EMA is flat. 55 has been flat. Looks like it wants to go now. On a daily, I've nowhere for the stop, etc. But on an intraday, it's the area to be thinking about. That's the most I can say about it. AUD. Now, the AUD has broken its range. So this was another weekly range that we had going on. It's broken it slightly. It's coming up to the 55 EMA, 6,800, major previous support and resistance. So it is an interesting area to short. However, the 200 is only 40 pips below. And notice 2 days running, the 200 was major previous support and resistance. If this breaks and closes above, and it clearly breaks and closes above the recent high, then I will shift my bias short term and think, okay, it could be that the Aussie is going to go on a run. Iron ore prices have bounced back a little. So it could be we're off for a run, or I will wait till it gets back up here for a potential short. In here, nah, it's messy. Risk reward's not clear. Don't want it. New Zealand dollar is the same. I made some notes. Which ones were they got? Pound CAD. Right, another example not to trade is a pound CAD, but let's have a quick look on here. Dollar yen. I do want to buy the dollar against the yen. Explained earlier, this was the match on the petrol, was when the new governor of the Bank of Japan came out and said, no, we'll just keep printing, lads. So that's why that did that. And the potential technically then for this to go 2,500 pips suggests it could be back on up here. And here, last time, 150 is where the Bank of Japan started to intervene to strengthen the yen. So it's quite possible that this has got another 1,000 pips to go. So I do want to be in it. Now, when you look at this on the range, clearly this is a major area previous support and resistance. It's 13800. But again, the 55's coming up. So by next week, it should be up here. But this is one of those you can go down to the 4 hour and start to look for clues for areas for the stop. And you have a 4 hour 200, previous support and resistance. So if this is to spike down, move down here, which would be a day and a half's range, I would be interested in getting into this. CAD, said earlier, it's down at this bottom area, which has been major previous support and resistance going back for a year. So it's clearly a significant area. Better news than expected last week from Canada from the interest rates, in that positive increase in interest rates is seen as good for the currency, not enough to shove it through here. So again, Canada needs something extraordinarily good, or the US needs something extraordinarily bad for this to drop. If this drops, then I would look for the pullback for short, or I will wait down here to long. Because 130 on this thing is massive going back 20 years. Euro pound. Now, the euro pound, we've just looked at it on a daily. It is also interesting if for range trading, because in here, you're looking at this area again, 30 pips stop, 100 pips. So that is a range that is tradable because there's room. 55 in the middle is a bit of a pain, but if it moves to here, I would move the stop to entry to protect it. But that has the potential to go. AUD yen, I seem to think, yeah. So AUD yen is an M2 again for me, because with this one, we have broken through the EMAs. We've got the 200 EMA here, which is the monthly, so significant. The bigger the number, that's more significant. 55 EMA coming up behind it. Remember, we want to be in the dollar yen, but if we can't catch the dollar yen, and the Aussie's currently moving up, then we might be able to get into the yen trade without going through the dollar. I'm risking 66 for 206, and now this has moved higher. Now I would reset my target back up here. So now I'm looking at 1 to 4, 1 to 5 risk reward ratio. Remember, you don't need to catch many in a month if you're hunting for the big one. Again, this is another one. So this is the New Zealand dollar against the Canadian dollar. So Canadian dollar last week better than expected. So you expect the CAD to get stronger. New Zealand dollar, the New Zealand economy is tiny comparatively. Their economy is not in a good place. So fundamentally, I only want to short. Here you have two areas. So this one is the first one, because again, major previous support and resistance going on, 50% fib, and a risk reward here of 30 for 220, so 1 to 7. And if it goes higher, remember, if you do this, you need to split the trade in half. So you split the lot size. Up here, I'm risking 63 for a potential 280 pips. Oops, Ashley's telling me we have 15 minutes left. Sorry, guys, I've gone on too long. I'm not feeling great at the moment, so I thought I'd only do a quarter of an hour and then let these two guys. Right, Ashley, over to you. Ashley's going to go through some Earth and Sky with you.
Yeah. Let me share my screen first. So, can you all see my MetaTrader?
Yep.
Okay. Before I just go on Earth and Sky, there was a setup I saw on the pound or the I missed it last week with the news here coming out. We had the M2 breakout, then the pullback, but this was the Aussie news. They were raising the interest rates and it worked out perfectly well. And that was around 200 pips there. So then the plan was for me, this is in the range down here. We have the daily 55 moving average in here. It has broken this range now, so stopped below it. So I am looking to basically short this now again down here at 185,900. Now I'm waiting for the news to come out and see what happens around that time. So if it comes anywhere in here after the news is due, then I will look to short it anywhere here. I did have a reminder in the night, but it triggered, but then didn't really come up to here. So I will be watching this one for a short, and then the same thing with the USD CAD, like Mark was saying, this is in the range, big range over here at the moment. So ideally, I want it to break out of this range, then a pullback, 50 pip stop, and then potential to do at least around 280 pips on that one. Right, so the Earth and Sky pairs, we have only a few today, this week. So around 5 pairs we have. And the first one is the pound USD. So this one we're looking for a long between 124,840 and 124,329. Now, this did not really come in the Earth and Sky range over here. So the Earth and Sky zone is here. The weekly pivot is quite high up. So this is the kind of setup I don't like. I prefer the weekly pivot to be in here for the long. So yeah, not really one for me, but you can see there's it's missed the zone and it's gone up now. So move on to the next one, the pound yen. So we have a few pound yen pairs, yen pairs, sorry. So the first one is here, the pound yen, and we are looking for the long at 174,220 and 173,480. So you're looking ideally for around 50 pip stop. You have this weekly pivot in the way again, but you can use the weekly resistance as your profit target. So you're looking around at least 200 pips on this one. Then you have the Aussie yen. So this one I quite like because, like I said, I have the weekly pivot in there. Along with the Earth and Sky zone and the 50% fib. So this one doesn't require a big stop, around 50 pips, and you're looking 120 pips on this one. So that's at 93,400 for the long, and you're looking up to 92,780 for the long zone. The last yen pair we have is the New Zealand yen. So this one as well is attractive. You don't need a big stop, around 30 pips for this one. If you want to be conservative, you could go below the weekly support and that's 50 pips again, but then you're compromising your risk reward. So over here is better if you're trying to take your target here, because it's only 30 pips, and then you're making your 1 to 2 up here. If you want to hold it longer, then that's around 100 pips. So out of those, I think I prefer the Aussie yen, just because how the setup is. And then the last one, we have the Aussie New Zealand. Don't really like this pair because it just doesn't respect the EMAs a lot. But we have the zone here, 50% fib, weekly pivot. We have a bunch of EMAs down here. So you're looking for around a 30 pip stop and potential 90 pip target. Again, so tomorrow you have the GDP in the night, and then the Aussie news in the morning on Thursday, I think. So you'll have to watch out for that one here. But for now, if it just drops in there, it could be a good place for a long. Right, so I don't think I have anything else. I think there was the Aussie CAD over here on the M2. I mean, it makes a really perfect trade, but I would like to wait for the news to come out to see what happens, because it could easily like try to go up and then come down. But usually if it hits the 100% fib, I consider it as like the trade is invalid and the trend is probably going to change. So I'm not into this one yet, but I will wait for the news later to see what happens. Right, we got 10 minutes for Phil if he wants to go over his analysis.
You didn't need any more. On
Right.
a serious note, what we were showing you at the beginning and what we're getting through this week is that you have a number of options. So you either do the M2, which is my thing, where I will just wait. And if I don't get a trade this week, I don't care, because I only need to catch a few big ones in a month to make the target. However, if you want to be more active trading, and I know some of you are doing this full time, then the 4 hour, and where Ashley's just showed you there, some of the potential yen trades, I want to get into those yen trades. So if I can't get in with my strategy, this is where Earth and Sky comes in handy. And then finally, we'll look at range trading. If we start to go into summer ranges next few weeks, we'll have a session on focusing on trading ranges, because you have to be able to adapt to the pattern. Anyway, I'm taking Phil's time now. So Phil from Michigan got up early this morning. He likes to have a badge and a round of applause because he was up at 6:30. Thank you very much. Morning, Phil.
It was actually 5:45, Mark, so that's why. So that's why I deserve the applause.
Right, take it away, young man.
Yep, we get my screen up. Okay, there you go. Can you hear me now as well? Can you hear me? Can you see my screen?
Yes, Phil.
Yes.
Okay, cool. All right. So I'll just rattle through a quick few. Looking at some that you mentioned already, Mark, but the ones that haven't been mentioned, we'll look at the New Zealand CAD. This one, I'm looking to short underneath the, let's see, we have the monthly 200 and the weekly 55, threading the 61.8 fib. And then we also have the both daily EMAs crossing in here as well. Pretty far away for price now, but we'll be monitoring this one, especially with the busy news week. Not too much going on. We do have GDP quarterly tomorrow for the New Zealand dollar. So I'll be watching it there, and then take profit above the psych level of 0.82. And then we'll look at the Zoom thing is in the way for me here, so I gotta try to navigate this. Undo that. There we go. Just to get to the Aussie New Zealand. Let's see this one. I have a split in on here above all of this mess of EMAs right surrounding the 50 fib and this trend line. It's broken through the trend, the recent trend of being bearish and now bullish. So I'm looking for it to retest this hectic area and get rejected back up and again to the psych level of 1.1. I am also looking at the Aussie yen and the euro pound, which you mentioned. But I'm also looking at let's see if I can get to the Aussie USD to do this again. Perfect. So this one I'm going to wait because we have the unemployment and employment news and everything that you mentioned already for the USD tomorrow. So no forward orders here, but we do have this weekly 55 poking down here right on the 0.68 psych level, which both of which have been good support and resistance for price. So just two areas of confluence there, but we would have a 1, 2, 3 quadruple top there. So I'll definitely be interested to see what price wants to do. Stop loss won't have to be huge, but it would if this was a forward order in front of the news. So definitely waiting there. And then the last one for me right now is the Euro New Zealand. If I can find that. Oh, right here. Euro New Zealand, this one did fire for me overnight. It was just fingers in the fire right there. Spiked up about 90 pips and has dropped down about half its way. So I'm definitely going to move my stop a little above entry there, managing that trade, locking in at least no down withdrawals. So locking in this trade for at least break even and watching with the news to see what happens with this one. And like you said, definitely going to keep it simple. Just watch what I can watch with everything else that's going on this week. So that's what I'm looking at.
Okay, thank you very much, Phil. Anybody, any questions before we go? We have a few minutes left, so if anybody's got any questions. Morning, Farah. Oh, afternoon for you in Malaysia. If anybody's got any questions, stick them in the box for any of us.
I wanted to shout out Andy. He's a new member. If you needed any help getting the ball rolling, Andy, you just send me a message.
Yep, through the forum. Yep. 7 p.m. for Farah in Malaysia. And Andy says, appreciate. Thank you very much. Rightio. Well, if we haven't got any more questions, range trading would be great. Yep, next time I'm with you, we'll do range trading. It might be a bit clearer by then as well, but normally in the summer, this is why, to me, EAs don't work. We've got somebody with us today who was using an EA last year, and it suddenly terrified him, scared the pants off him, and he had to stay up all night trying to dig his way out of the hole. And thankfully, he got out of a lot of the problem. But what happened is, and what happens with EAs is that as the market pattern changes, the EA just keeps doing what it's been programmed to do. The advantage we have as humans is we have the ability to see that the market pattern has changed, and therefore we are able to adjust our strategy accordingly. And I posted an article a few weeks ago, and I said to folks, if you focus, especially if you're new or not new, focus on the entries. Let me quickly share screens here. This is an article from about a month ago, and I was explaining that we have a really cool piece of software under Trusted Products you can find that will manage the trades for you. So for particularly somebody like Phil, anybody in the USA, Canada, or Australia, definitely check it out. Anybody, I twisted the arm of one of the guys from New York to buy this, and he said it was the best thing he'd ever bought. And there's a 14-day free trial, and there are articles in Rookie's Corner on how to set it up and how to use it. So this thing will manage the trades once you're in them. It'll move stops, so however far you tell it to, it will take some profit off, etc. What I was explaining in my blog the other week is if you focus on the entries, and just as we did with the euro pound, was that we went through today. So check out the recording later today if you don't get a chance to, if you didn't get to take any notes from this. But the point is, you are able to see the market pattern has changed, and therefore you can still find good entries for multiple reasons that tick all the boxes, and fundamentally it supports the theory as well. And I explained, if you focus on entries, that's all I want you to do. If you're new, focus on business plan. Go through the STT. You do not trade the STT on its own. But the STT is the backbone for M2, and focus on M2. And master that before you start going on to any lower time frames. But if you can see the entries that Phil is with us now, Ashley's with us now, I taught both of them last year. They both have quit the jobs and both are trading full time, as well as helping here at Mentor Pro. But Phil took probably 6-7 weeks for him to see stuff. He kept randomly throwing things at me that I didn't understand. But if you can see what we see, not blindly copy us, and focus on the entries, then you get the software to manage the trades. So that is the key to doing this properly. Niraj says, sounds great. I have a disease of closing my trades early, so it should be good. We'll look it up. The way to get around the issue of closing trades early, Niraj, is take partial profits. Rudolph said, I added the weekly pivots to M2. I don't do it, Rudolph. I find if you put pivots on my template, by the time you've got the weekly pivot on, and the weekly R1s, R2s, S3, and the EMAs and fibs and trend, there's nothing, there's always something in the way. The only exception to that is occasionally I will put the weekly pivot alone on. So if, for example, I am looking for a range trade and I'm struggling for a stop, for example, let's imagine this was a range trade and this 200 wasn't here, and I really fancy this. If the weekly pivot happened to be there, then I can use it to my advantage. But in general, the weekly pivot is Pierre's Earth and Sky. I just use my system. And as we discussed when we spoke the other week, I try to simplify things. I have taken so many flashing lights and indicators off over the years. I am looking at basic structure. I am looking at support and resistance in all its formats, i.e. EMAs, fibs, trend lines, horizontal, etc. So mix and match the two for sure. If you trade Earth and Sky, do M2 first, so you understand the big picture and where the big levels are and the big trend lines are and the big areas, because it can help you to stay out of potential losing trades. Righty-ho, thank you all for attending today. And Ashley will post the recording of this later today, and we will be updating you during the week as well. Thank you to Phil for getting up at 5:45 a.m, as he mentioned. I think double time if you're up before 6, Phil. Oh, but we didn't start till after 6, sorry. And yep, have a great week. Be very careful, tiptoe around the news, and we'll see you all next time. Thank you very much. You're welcome. Bye-bye.